And I think the government's made a major error. If they had taken a little more time and thought it through, they wouldn't have wasted so much money.
Welcome back, everyone, for another episode of the Stock Talk podcast here with Invest Like Mike. Today is May 26th, 2022, and we're going to do a really nice one today, touching base with investor Benj Gallander, portfolio manager with Contra the Herd, and he's been on here before. And welcome back, Benj.
Good to be back, Mike. Thanks for having me. Are you doing well?
I'm doing really good. The sun's shining. It's a little brighter in here now, and we're getting some gardening and yard, the grass is being cut and all that stuff's happening now, so I'm happy.
Cool.
Now, the audience will be familiar with you at this point. You've been on the podcast before, and you've been on BNN and various other resources. You were at the Money Show. You were doing a bunch of stuff recently. You've been doing a lot of interviews. What I'm going to do is we brought you back at a time kind of strategically. I was patient and invited you on because we're in a unique time, and this is a very different market environment from last year when you were on, when it was money printing and a bonanza market, so to speak. It was very different, and that's part of why I brought you back, because I think we would all appreciate your insights and what I think is a major change going on.
The times, they've been a-changing. Obviously, we've moved along through the pandemic. The economic times have changed. What the government has been doing has changed. And what consumers are feeling has also changed.
And one thing I was talking about with Benj in the lead up here is that, I'm thinking about finance and economics all day. I'm not an economist, but I'm always interested in focusing on that. And some people watch sports all day or reality TV or whatever it is. Not everyone's really paying attention to what's going on with the Federal Reserve. how exciting is that really, right? If you're not interested in it, it's not really that exciting, right? It's kind of
like watching paint dry.
Pretty much. Maybe the paint drying would be better on some days. And so I assume most people don't pay attention to that stuff. And so, given the current market condition, I think a lot of people are saying, what the heck's going on? How do we get here? And how do we get out of here? And we might be saying, well, we saw this coming, or here's why it happened. And I think we can have a good conversation today to kind of help people understand maybe our view on what's going on. So that's going to be the goal today. Okay?
Sounds good.
So what we'll do is I'll share the screen here, Benj, and we'll give the folks a little info on you again here. So if you go to my website, folks, under the podcast page, that's where you're going to find the new podcast with Benj. When I upload it, it'll be at the top here, and you can check it out. For Benj Gallander himself, he's with Contra the Herd, and they have publicly posted returns here like we showed you last time. He's got a really good performance record here, folks. Hard to beat these kind of numbers, the way he's doing things. And this is his website here. You can always subscribe to Contra, and he has a newsletter, and him and his partner Phil and everyone that works together with him, they're going to give you the really good insights on how they think things are going, what future trends might be coming, and it's a really good resource. I know some people have already signed up, so check that out. And then he's been on BNN as well, and has a bunch of other resources if you want to check that out. So Benj, the big thing just to remind people of here, I'm going to give a really quick highlights here. So inflation is the key word of the year right now. Everyone's talking about inflation, whether you're talking about last year and this year with the stock market, or whether you're going to the grocery store. There's been inflation in different places. So you could see 8.3%. Normally the Federal Reserve targets 2%. So this is ridiculous. And it's a 40-year high. The last time it was this high, it was the year I was born, which was a while ago. So that's 40 years ago, right? We're breaking records. This is from May 11th, okay? And consumer spending has been slowing since February or March, in my opinion, because of the inflation, right? You have to figure out how are we going to keep spending if maybe our stock portfolio is down and the price of goods is up. So we've been seeing this kind of playing out. And as a result, the Federal Reserve did a bunch of rate hikes already. They're planning more. And this headline, which is from today, is saying that the Fed minutes are pointing to more rate hikes as expected, and they might even go further than the market anticipates. So scary headlines, which is what we've been seeing for a while. We see recessionary headlines, right? The recession is likely. Other people say it's not likely. And there's basically a bunch of scary headlines where people are worried about a recession. Now, the last thing I'm going to show you is the Fear versus Greed Index, Benj. This was down at 9 last week, okay? And I don't know how much you watch this, but this is never at 9. I mean, maybe March 2020 and very specific times. So even at 17, people are very afraid right now, and interest rates are higher, the cost of living is higher. All of the smart people around us seem to be kind of talking about these things and kind of ushering people to be careful. So I wanted to bring you on, give people that kind of a little update and say, Benj, what the heck's going on and how do we deal with all of this right now?
Well, I guess the first thing I could talk about is the pandemic, which it seems like we're getting through. It changed the economy dramatically. Things got closed down, as we all know. And the government reacted by spending, whether it was the American government, Canadian governments, other governments, by spending huge amounts of money. And I think in a lot of ways, they were just spending money, throwing it against the wall and seeing what would stick. I don't think they spent wisely at all. I don't think they picked their places to spend. I think they were so afraid they just kept throwing the money out there, which was a huge mistake because we have these debts, the government deficits, and they're just growing and growing. I did an estimate. If the pro forma debt grows the way the federal government and a provincial government in Ontario said, each person living here will have their debt increased by over $6,000 by doing nothing. And we don't think about that. And the government in some ways doesn't think about it. Plus there's all of that debt that was already there. Now, if the government has to pay interest on more and more debt, that means that they can't spend on other things. So it puts them in a bit of a bind. Years ago, there was an article cover of a magazine whether Canada was becoming a banana republic, a banana currency. We got our house more in order, and now, when deficits are over $40 billion, that's insane. It just didn't make any sense. But that's nothing compared to what it's at now. And I think the government's made a major error. If they had taken a little more time and thought it through, they wouldn't have wasted so much money. And that's a problem. So what does all this spending lead to? Besides the fact they won't have much money to spend in the future, leads to inflation. They keep putting more and more money in the system. If there's more and more money in the system, that means there's more money for people to play with. And that's been a major cause of inflation. I mean, there's all kinds of other causes of inflation. Sure, Russia, Ukraine is one. There's supply issues out there. If you have less supply and you have the same demand and more demand, that means prices go higher. Difficulties in China, that's a problem. It's hard to know exactly how big the difficulties are because they're not exactly an open book, but there are major difficulties. I think the governments added to the woes because they took so long to raise interest rates. At my Twitter account at Benj Gallander, I was saying quite a while ago, inflation is here, when the government was saying, no, it wasn't. They started to notice it. They were saying inflation was transitory. Well, unless you think of transitory as relatively long term, it isn't transitory at all. So by holding interest rates down for too long, it's like someone not taking medicine when they know they have a disease and saying, I'll take it later. The disease can get that much worse. And that is what has happened. So major areas by government, major areas by the Bank of Canada. The US has done no better, other countries. And it's very, very unfortunate because we're going to have to pay more and more for that. And it's going to be paying more during a more difficult time.
Now it's very interesting the way, and as I'm listening to you there, it almost seems as though you're keeping up obviously with the Federal Reserve because the U.S. currency kind of runs the world. So it almost seems as though you're saying Canada hasn't performed as well as America has in your eyes, and we could have done a much better job, which could leave us in an even worse position potentially, if that's correct.
Well, I think they both performed very poorly.
Okay.
I think they both spend an incredible amount of money. So much of it's wasted. Neither of them raised interest rates quickly enough. And I think there's certain reasons for this. You think of why governments make so many errors. I think a major one is they want to be reelected. So they're often focusing on how they can be reelected rather than what's best for the people. These people, the majority of them, I think, want to keep power. And that's what it's about. They want the power itself. They want their salaries. They want their pensions. And that's created an awful lot of problems. We can also say lack of experience in these situations. You pointed out before, last time we dealt with this kind of inflation, you were being birthed, just coming down the canal. Well, a lot of people in power have never seen this kind of thing. So they really don't know how to deal with it. So, they bury their head in the sands a little bit. They just, they're not cognizant of the best way to deal with it. So that's a problem. Major lack of experience here. I think also there's been denial. I think in a lot of ways the government didn't want to worry the public. They didn't want the public to think they were doing a bad job. So by denying inflation and what was going on when it was perfectly obvious, I think they might have thought they could get away with it and hopefully things would turn around. I think there's also groupthink. We know that political parties, both in this country now, more so in the US, if the Democrats say one thing, the Republicans will say something else. You mentioned now it's a lovely day here. Well, if you were a Democrat and said it, the Republicans would say, no, there's clouds. And this is horrible. This is horrible the way they're working like that or not working like that. And it's too bad that they're not working together more. They're not looking at reality more. They're just saying, they say this, we'll say that. We were seeing that too with the PCs, the Liberals. Liberals would say something, and O'Toole, Scheer, Ambrose, they would say the opposite. And it's just such a sad, stupid state of affairs. And I'll throw in one other idea. I cracked an interview the other day. Maybe these politicians who are making a lot of money don't do their own shopping. So months ago, I would go to the supermarket and I would see prices were way up. And I know we've talked about this. So it was very obvious to me inflation was going on. On the other side, I was saying I shop sales. I like sales. If I can buy something at 20% off, I'm not only saving the 20%, I don't have to make as much money, is how I look at it. So I wonder if these people were going to supermarkets and noticing how prices were going up so much. So when they were saying, nah, there's no real inflation, 2%, etc., I was looking at it and saying, there's much more inflation. And the other thing was, I'd go there and I'd look to buy my bacon on special, and I couldn't. I looked to buy other things on special. So instead of something like bacon being like $7 being on for $4, maybe it would be on for $6.50. Maybe. So yeah. So it was very obvious. It's just sad to see that these people are making our decisions, and their analytical tools in many ways are simply not that good. And then you've got, the politicians now, Pierre, who could be the next PC leader. He's being so negative. And I don't mean in terms of negative what's really happened, but I hate the policies in the States where politicians, especially Republicans, are so negative. Yeah. It creates a very bad atmosphere for so many people. I think state your platform, state what you want to do. You can state what the other people have done that has been wrong, But, saying you're just going to replace the head of the Bank of Canada, uh, I don't know. It's kind of embarrassing to me, but I'm not a politician and I will not be it. I assure you, Mike, this is my promise to you and the people listening. I'm not going to run for office.
I don't think we would make very good politicians. We'd be pointing out all the problems and wanting answers, probably.
Yeah, I think in some ways I could be a good one, quite frankly. I don't want to deal with a lot of the bull. It just, I don't have enough time in my life.
You have other things to enjoy in life, I'm sure. So, I mean, I had a similar experience to you. So, like, I mean, I've learned from, as I said, from you from 2006 onwards. I remember you were like the first guy I enjoyed watching. And then I got into Ray Dalio. I've got Warren Buffett behind me. I studied the macroeconomic long-term type trends. So when we had market weakness and they printed all that money, even when I talked to you, I was talking about inflation already, even if it wasn't here yet. I was saying buy stuff, buy things, spend, because we're going to have inflation. And I don't think when we saw the grocery prices go up, but they told us on TV the inflation was still okay, people just kind of believed them. And I said, no, it's starting, it's brewing. Mm-hmm. And then it just snowballed from there. And, I always talk about bacon prices. I do weekly training sessions every Sunday. And I talk about bacon and bananas and food every week because it all goes higher. And even my McDonald's flyers that you get in the mail trying to tempt you to buy McDonald's, it goes from $6 to $6.50 to $6.89, now $7.19 for the cheap combo on sale. And it's like even McDonald's has been inflating like crazy, the cheap food. And when we talk about all these things, I think it's something that people should be aware of because these politicians we talk about making the decisions, many of them are doing okay financially. Oh, and the people who aren't making the decisions and aren't even aware of what the decisions mean are the ones having to deal with the consequences in the end, in the largest way, right? And I think understanding how that works is important because if you didn't know inflation was coming during the pandemic, nor that rate hikes and certain things might tame it, then you're just going to be the deer in the headlights, so to speak, right?
Yeah, and I mean, the politicians, I think they're all at six figures salaries. They've got their pensions later on. So they don't have to deal with it in the same way. I mean, for people who do not have much money, for people who are poor, for people who are struggling, this is a horrible time. And the number of people going to food banks in Canada has skyrocketed, absolutely skyrocketed. And around the world, we're seeing the same thing. And some of that's because of Russia and Ukraine. The Ukraine can't get a lot of their wheat out and their other products out that would feed populations because the Russians aren't letting them do it. So we're seeing, there's talk about famine in certain parts of the world, etc. Mm-hmm. And it's just so inhumane what is happening. I mean, you and me, okay, I go to the supermarket. Generally, I want to buy something, and I do. Again, I look for my sale. But at the end of the day, it's not going to make a big difference to me. We're not going to go hungry here. My youngest son tonight, he has his prom. He's going with a bunch of buddies in a Cadillac. He's got this cost, that cost, this cost, a new shirt, etc. We fork out the money and life goes on.
For sure.
But for other people, it's not so easy. And quite frankly, I appreciate how blessed I am in that way. I don't take it for granted. I think about it. But a lot of people, they're just thinking, how can I get by? How can I get by, hand to mouth, but I got to put something in my hand.
I mean, I even just like a little funny story. I was talking with a friend of mine, and he's a teacher, and he makes good money and everything. But still, like you said, I'm buying stuff on sale too. Why not? And he had a date, and he promised them steak and shrimp, right, which is not a cheap product necessarily. So he just went to the store, and he said, "Mike," he goes, "I didn't even look at the price." He goes, "I just grabbed the steaks, and I didn't look, right?" And when he got to the checkout, one of them was $21, right? And it was just. It's so expensive, but at the end of the day, you got to live your life and enjoy a little bit too. Now,
I'll give you one other story. I was at the supermarket about a week ago, and I was looking over the fruit with a young woman, and I said, "Boy, prices have gone up." And she said, "Yeah, how can people eat healthy?" And I
yeah.
could see she was thinking she's focusing on eating healthy, and given the prices, she just might have to, compromise and not eat so healthy. It's sad.
When you go to the store and the head of lettuce is $4 instead of two, and everything's double almost in some of these situations, it really sucks, right? And you have to really decide: am I leaving one thing out, or what am I doing here? And it's putting a lot of people into a precarious situation, especially if you were already tight financially. So
Absolutely.
and I don't like that. I don't like that aspect. So now, I guess one thing I wanted to talk about was I always keep this book around, Sun Tzu, The Art of War. Okay, it's
I read it years ago.
yeah, very thin, easy book to read, folks, if anyone wants to check it out. So Sun Tzu, The Art of War, one of the famous quotes he has is, "Every battle is won before it's ever fought." And I really have linked that into my macroeconomic kind of trend following over the years, and linked it in to all these books behind me and all of my thinking, because it's true. So when they printed money in March 2020, or rather April 2020, did you react? Were you confused? Did you know what to do? When they announced major rate hikes and no more money printing recently, did you do nothing? Did you do something? Did you know what to do? If you knew what to do, right, every battle is won before it's fought. You can be reactionary on a macro scale view, not week to week. And I think a lot of people might not be aware of those type of things. What have you done as you have heard the policies change from let's drop money from helicopters to, hey, no more money printing, we're going to hike rates and we might be going into a recession? Did you change in any way? Like, what happened during that time for you?
Yeah, I haven't really changed very much. I was doing a fair bit of selling early on because I was prepping for a downturn. I've been doing very little buying, and that's basically how I deal with it. I mean, this morning I was thinking about I've got a lot of money in cash, and I've been trying to think where to put that. I would like to buy a few more stocks, but I have to find the right ones. At the same time, GIC rates, bankers acceptance rates, they're going up. So maybe it's time for me to put more of the money in that. So, cash, I always have cash on the sidelines. Normally I have too much. I would like to have more of an investment. But my philosophy hasn't really changed. And I think a lot of people get fooled because a lot of advisors and planners will say to them, you have to think about inflation and how to invest now. So you have to think about changing your investment philosophies to keep up with inflation. I think it's a bit of a red herring. I think that you don't have to do that. Inflation is what it is. How you're going to invest relative to your portfolio and relative to possible returns, I don't think generally should be changed because of inflation. You do what you can. Now, at the same time I say that, GIC rates are going up. So it could be a time to get more GIC money into GICs. But people who are chasing returns, whether it's in normal times or not in normal times, often can make huge mistakes, because to chase higher returns often means taking higher risks. And I'm big, as you know, I'm a big risk reward person, all about probability. So if all of a sudden you say, okay, I've got to get 7-8%, and I've got to try and guarantee that, hopefully you were doing that anyhow, but that can be real folly. So yes, the state of the economy has changed. Yes, we have to look at that and notice it. But the way to deal with it, I don't think, is to be chasing higher returns.
So for someone like yourself, like you seem to have cash, you've always said there's always another bus, right? There's always another bus if you have cash available for the next opportunity. In the past 2-3 months, I have a friend that just dumped in a bunch of money because he said the market's never down 20%. So he bought some good stuff and he's holding on. Do you start to go towards reducing your cash position due to the environment that kind of provides you with more opportunity to spend some of that cash?
Well, I will with the opportunities. I don't think I bought a stock this year for the portfolio. I've been watching. There's three major decisions: buy, hold, buy, sell, and hold, or buy, sell, and don't do anything. I would like to buy a few positions at this time of year, though I rarely do any buying. Most of my buying, as I think you know, is at the end of the year during tax loss season.
Yeah.
So I'm more reticent to buy now. It doesn't mean I don't, but I'm less likely to do it. So I'm looking around, I'm doing my research. I filtered all of the stocks in the United States a few weeks ago. I'm going to do the same thing in Canada in the next 10 days or so. I'm looking for stocks down at least 33% in the past 52 weeks. So I'm doing my research. I'm also continuing to research and follow the companies that I'm quite interested in. So I'm staying up on things, but I haven't been buying anything. And as you said, if you miss one bus, another's going to come along in the market. And once I discover a company, I wait at least 6 months before buying it. And I was doing an interview out of Australia a few weeks ago, and they said basically, well, aren't you afraid of missing things? I miss things all the time. I'm going to miss way more than I buy. In a normal year for the portfolio, I might buy 5 or 6 positions. So would I like to get the ones I miss? Sure. But the key things are the ones that I buy. I'm always looking to cherry pick. But the methodology for me doesn't change in this environment. If we were in a hyperinflationary environment, it might mean I would be buying things more quickly before prices have gone up. And when I lived in the Middle East at one point, I was in a place where it was very, very high inflation. So by buying now instead of later, you can get a better deal. But even 6, 7, 8%, it's inflation, it's high, but it's not super high. This is nothing like the inflation we experienced way back when, and Paul Volcker raised interest rates to, I don't know, around 20%. We raised around 20% here. And what many people miss is when inflation goes a lot higher, interest rates generally do. So back then, one of my investments was in a GIC at 19.5%, 1.5 years. It was in my RRSP. It was fabulous. I wish they would have let me do it for 3-4 years.
That's amazing.
It was great, but the interesting thing was how interest rates that I could get followed the inflation. And I think generally we're seeing that now. Inflation's up, interest rates are going up. So part of the question then becomes when to perhaps lock in. Do you keep on doing GICs or T-bills or things like it for a year? Do maybe you decide to say, you know what, I'm going to go for 3 years or 5 years? At this point, I haven't done anything like that because I think there's going to be more interest rate hikes, but certainly something to look at. I know this is, some people say, well, this isn't very exciting. This isn't stocks. You know, Gallander, you had a 41% return last year. You won't do it this year. I don't do that most years. In the stocks, we'll see, but I always have a lot of money on the sidelines, which makes low returns in this kind of a market because it's in cash, getting low interest rates. But to me, that's good diversification, and it's then there to invest on another day.
And you know what? A lot of people, like, I mean, if you listen to Ray Dalio or a lot of people, they say cash is trash. So that kind of goes in the face of kind of what you said there. But, you know, there's many ways to do things, and it's not, I find that everyone's always tempted to be fully invested and not have cash on the side because cash is trash and you're not catching inflation. But as you said, sometimes being available to an opportunity has more value than simply always having your money at play. And I think that's something quite valuable because right now, last time I talked to you and Phil McKellar, your business partner, you know, you were both pointing out how stocks aren't cheap historically right now. It'd be great to have a healthy pullback, and then maybe we'll buy some quality names. You can't do that if you don't have cash. And it seems like you're always prepared if something happens.
Oh, absolutely. And I should say my actual business partner is Ben Stadelman. Phil works with us.
Oh, okay.
Phil will be taking on a bigger operational role next year. He's been with us for almost 10 years. Um, so he probably loved that you said he was my partner. He's our colleague for sure.
Okay.
But yeah, if you don't have the money there, you can't take advantage of things. There's this guy he's a pretty good investor, a guy named Warren, Buffett, that's it. And Warren always has a lot of cash on hand. And he's got the money there so that he can pull the trigger on things. If you're always fully invested when markets take a real beating, then you're just going to lose a whole bunch of money, plain and simple. So to me, when markets are high, you want to have more on the sidelines. I'm very, very disciplined. In my book, The Uncommon Investor, I have one page. The whole page is without discipline, you have no method. So it's absolutely critical. So I like to have some money there. I like to have some money that I can then use. Is it boring only getting 1-2% on it? Sure. Is it safe? Sure, overall. But I think that is smart. But when markets are low, after there's a rout in the markets, that's when I like to deploy a lot of the cash, take down the cash level, and hopefully the markets will perk up. Because, markets can often take a decade, 2 decades to return to where they were before. A lot of people haven't seen how poorly markets can do over a long period of time. And I like Ray. He's a fabulous investor. I read one of his books. But all of us, even though we might do really, really well, that doesn't mean by any means we're foolproof.
No.
Yeah.
And I think that's the thing is that, like, I'm not even asking you for an answer. There is no right answer. I think that's what my point is. Someone might say have all your money in all the time, and Ray's doing pretty good. You don't have all your money in all the time. Warren doesn't. You guys are doing pretty good too. So I think it's just there's many different ways to do things in life, and I think some people have been taught to always have all your money in. And also the other thing is, you pointed out Warren Buffett here. One of his famous quotes is to buy when others are fearful, right, and sell when they're greedy. Well, it's very difficult to sell and have cash when the market's running and other people are greedy, which is what you've done. But what might be even more difficult is if you have the cash and the TV's telling you we're going into a recession and doom and gloom, to buy. And so you having that cash around, you're going to be willing to make that decision and deploy that cash. What advice do you have someone who, they have the cash, right? Maybe they've been disciplined, but they are scared to put it in right now and maybe watch it go down another 20 or 30% before it eventually might double for them in the future if it's a good investment. How do you deal with that mental game that I'm describing there?
Well, psychology is a major part of investing, there's no question. I mean, you can tippy toe in. I assume that people who are doing that, hopefully they haven't sold all their stocks. Every once in a while you have one of these gurus, suppose, who says, sell everything. I remember when Elaine Garzarelli said that, and she was right back in 87, I think it was. But then if you followed what she did after that, she was horribly wrong. So I think you have to steel yourself to some degree. You have to be disciplined. You can gradually go in. And to me, that's the best way of doing it. And the best time is when markets are really beat up. Markets are really beat up. Most people here won't remember when they fell 22.4% in one day. I remember that. I went from my house, or the house I was renting, down to one of the bar restaurants where the traders would hole up. And I just, watched and listened to the doom and gloom. It was awful. But, I don't know that we'll have another day like that because of certain blocks, so to speak, that are built into the system now.
Right.
But now markets down almost 20%. So that can be a good time to nibble away on the right stocks. if you're buying, and in my case, I'm buying what I think are value stocks, cheap stocks, stocks that have really beaten down, there's a good chance that they will come back at some point. So if markets don't even go down further, they will likely come back with the markets and when markets do. So, it's a dance. You can't get them all right. You have to know that you won't be able to. I think a key is diversify your holdings. Don't over diversify, which a lot of people do because that kills returns. And there's a chapter in the Contrarian Investors 13 you have behind you, which the whole chapter is about not over diversifying. Because people are told to diversify, it's good. Try not to be overactive. Commissions aren't that great now. That's not the big thing. But often people are overactive because they're afraid or because they're greedy. And often then they make the wrong moves. And that can be a real problem. So it's better. I mean, I'm a big person to just sit back and not do nothing and just to watch and research and wait. I still have some investments. I'm looking to make more. But for a lot of people, it's hard because all that noise out there is saying, do something, do something, do something, make a deal. And that just isn't really what you should be looking to do. Sit back and wait. So now I wouldn't mind buying a stock or two now, but as I said, I'll do most of that buying in December. Do I miss opportunities? Of course, as I said before, but I'm used to that. And I'll keep on doing it. It's just the nature of the beast, so to speak.
And you're in for the long haul, so missing out on a few months, you're going to gain that back hopefully in a few years kind of a thing. So you're more long-term minded, and you'll still pick up some quality items when you get them, right? So.
Oh, I assume so. I mean, we've been doing this for a long time. We have evolved the system to a degree. If anybody's interested in seeing the actual letter that we send quarterly, by all means, shoot me an email. I'm happy to send it to you. And you'll see in the center spread the kind of stocks we hold in the two portfolios. I manage the one, Ben and Phil manage the other one. So you'll get a much better idea of what we actually do. And the system that I use is a morph of other systems. There's momentum involved, there's management involved, there's technical analysis involved, fundamental analysis. And I've combined those all, so to speak, into my system. And the Contrarian Investors 13, which is available from our website, anybody orders it, I will dedicate it and sign it for you. It outlines exactly what we do. It also outlines at the back this bibliography. And it points out a lot of the other books that I've read that I really like. And as an investor, I think the key is to do a lot of reading. Read books, business magazine. I write for the Globe and Mail. I think the Globe's a great newspaper for business. So I do a certain amount just when I'll lie down on the couch. I'll kind of lie down like this, look up, shut my eyes, hopefully not fall asleep, and I may run through scenarios. And I think that's key. And I go on a lot of walks. Today, I actually went on a hike with a group. It was a little different because as a group, we were talking about nature and it was all about turtles and that kind of thing. But often, I'd say 5 days a week, I go for a walk on my own. And sometimes I'll think about investing. Sometimes I'll think about how, the Toronto Maple Leafs are going to win the Stanley Cup next year. I can think about the weather, vacations, so many different things. And often I find when I do that, some key thoughts pop in my head and I'll have certain epiphanies.
You know what? I think that's a really good way, and that leads into kind of what I'm going to ask you next. But I've been going for more nature hikes, and sometimes I'll think about stocks. I'll even make content for my viewers and things. But it's a good way to just clear the head out from all the noise and the junk that gets in these ears every day, and to kind of get away from the stress even of the market sometimes. I like the viewpoint you've taken on things, and the fact that you always have cash. I know many investors who have followed me have been kind of all in all the time, and earlier this year I said, hey, maybe 10 or 20 or some kind of percentage of cash might be a good idea. And I've gotten some private messages from people saying thank you for nudging me in that direction. I don't tell anyone what to do. But now they're like, when can I go shopping? And it's a different feeling than being stuck. And that's why you do it the way you do it, obviously. So I'm in your camp. I'm waiting to go shopping. And if anything happens and something I like, I'll buy some. You know, and it needs to be something quality and proven, in my opinion. Not Bitcoin, which I sold at 56,000, but I won't. Not even touching that. I'm not even going to touch it. There's no rush, in my opinion. And I think that we're going to have a lot of opportunities ahead of us. So just one last question. It kind of links in to kind of what we just went over here. I mean, dealing with stress, it's not all about finance here. The pandemic, the markets, inflation, depending on who you are, you've experienced different kinds of stress. And it can be difficult dealing with all the different things, the lockdowns, the finances, strain on relationships, all kinds of things like that. Maybe you partially kind of answered it, but how have you dealt with these challenges over such a long period of time? And every time we meet you here, you're still calm-mannered, happy, and you're the same guy over there. How have you and your family, dealt with all of the different challenges over the past couple of years and even right now?
Well, a big thing for me is I have zero debt, except for my latest visa. And then what I'll do is I'll put a check in the mail. One of my sons laughs at me, pay it online. I pay lots online. By having no debt, right away I'm in a far safe position. My house is secure. There's money in the bank. There's stocks. So I'm a great proponent for people to pay down their debts. And if they do that, that means that nobody's going to come knocking at the door. Nobody's going to be chasing you, that kind of thing. I used to work on financial turnarounds. So a small newspaper that I turned around, they owed an awful lot of money. And I was getting phone calls all the time that I hadn't been told enough when I took on the business manager position. And it was like, oh yeah, you owe us $3,000. Oh, you owe us $1,500. The people we owed over $100,000 to and $40,000, $50,000 to, they weren't calling so often. I worked out a sequencing of payments, so to speak. But a big thing is pay down your debts. And, I'm a proponent. A lot of people might disagree with me. If you do that, I think it's worthwhile to do that before putting a lot of money or any money in stocks. Because every time you pay down your debt, you're getting back not only the money you don't have to pay, but say if you owe $1,000, if you're in the 33% tax bracket, you've got to earn $1,500 because your partner Justin Trudeau is going to take $500 out of it. So to me, that's key. Once you've paid off your debts or paid down your debts, there's a lot less to be worried about. And I'm pretty lucky. My better half, she's working. She works as a translator. Both my boys are doing well. One is at a place today, Down to Earth, where he's worked for the past 3 summers when he's not at universities. He's making some good money. My other son works there some weekends. So it's quick key. And what I always used to think all the way through university, etc., was have some money coming in. Try and make it so you're earning money all the time. But, it's a lot easier for me to say than somebody who, as we've talked about, is just scraping to get by. But if you pay down your debts, it makes things a lot simpler. Don't chase the possibility in the sky. Every time you pay down a debt, you're really taking care of business.
Yeah, and I think that what I've seen too, just in general for maybe the past 10 or 20 years, people are very much so encouraged, and the bank will always give you more debt to go spending with, and it's up to you on how you do that. But when it comes to a challenging time, you're going to be stuck with those payments, right? So people need to remember that it's not just the good times. You have to think about when it gets tight, and right now could be a time like that where people might be experiencing it really for the first time. Like, what if you got married 5 years ago and you've never been through this type of stuff before? You're just dealing with the cost of everything, and maybe you have your line of credit and your credit card and everything going, which is, a lot of people. So it can really put a strain on people right now. So paying debt would alleviate some of that stress, obviously, right?
Yeah, I remember when the newspaper I did a turnaround on, we were on a payment schedule with them because we owed the bank quite a bit of money. And when I got it all paid off, all of a sudden it was like they were my best friends. Like, how can we loan you money? And I felt like giving them the finger, literally. And that we didn't borrow. I made it so that we never had debt at that company again. So it's people want to lend you money. A lot of people want to lend you. A lot of corporations want to lend you money. A lot of them, these pay places, cash for this, cash for that, Money Mart. They want you to borrow money at usurious interest rates. I think places like that should be outlawed.
Yeah.
And why the government doesn't do it, I can't really say. But yeah, people are willing to lend to you often at crazy, crazy rates. And people have to learn how to say no and just, think. One of the things I say, it's not originally mine, but nobody loves your money as much as you do. Nobody will take care of your money as well as you do. And that's absolutely critical, because if you get screwed up by somebody else, A, you're the one getting screwed up. B, they may just be at your door saying, you have to pay me. You owe me this money. So yeah, I like having no debt, that's for sure.
I'll just bring up one last topic here and I'll let you go. Part of my, I'm very happy that I dove into becoming interested in investing. And I'm glad I went through the 2008 crash, and I'd already read the Warren Buffett book and watched you. I learned by touching the hot stove. And what I learned was that even though it might seem like it's great, after every keg party there's a hangover, so to speak, not everything stays great forever. And when I learned that the hard way, I said, okay, I bought gold and silver after the 2008 crash. Some people wanted to hold gold and silver forever. I said, no. I said, I made a bunch of money. I'm going to take it and maybe move on to the next one. And I got comfortable with not being married to an idea that I liked. The reason why that happened is because I just realized that this is the Zimbabwe $100 trillion note. Now, we don't have hyperinflation, but I'm pretty sure that the cost of living every 10 or 20 years is going to be higher. So we're in this period right now where we're figuring stuff out. But if you just go back every 10 or 20 years for a long time, you always pay more for that McDonald's or the steak or the whatever it is. I still think we're in a period like that, and I'm aware that it goes in pieces and sections, and there's some volatility to it. I think having that kind of a perspective is very important. Otherwise, you're just kind of a deer in the headlights and kind of maybe taking on debt, thinking times will always be good as well. And that could be a dangerous game.
Yeah, I mean, one of the axioms is invest so you can sleep at night. And I think that's key. You don't want to be tossing and turning because you have so much debt, because you've decided to take certain risks at certain points in time. I never ever bought on margin. A lot of people love margin.
Yeah.
Somebody asked me 15 years ago, or said to me, if you had invested on margin, you would have made way more money. And I said, you're absolutely right. Absolutely right. But then I would have had a headache. So I wouldn't invest on margin either. Basically, I want to buy a stock, and then I sit with it. And again, there's a diversification aspect. I do own a little gold, not much. I do own a little silver. Where I own more gold is in gold companies. Mm-hmm. To me, that's a pretty good way of doing it. But what we've been seeing lately, it's crazy what's going on in the way that the rules are changing. I mean, right now, Russia wants to pay its debt. And the U.S. has said, no, you can't pay your debt. And so they're saying Russia may have to go bankrupt. Russia has the money to pay the debt, but the U.S. is restricting them from doing it.
Wow.
So it's a brand new set of rules. And the rules now have been changing so quickly. These ADRs in New York, Russian companies, all of a sudden they're saying, sorry, you're delisted. And we actually got caught in that with Mobile Telesystems. We don't get them all right.
Oh, wow.
I thought the company would keep on trading. Now it's not trading. It may start to trade again at some point. but for the moment, we're not getting the dividends. But I had never seen anything like that, where a country said, you guys can't trade on our stock exchange, even though you've been trading there forever. So all of a sudden, some of the powers that be may just change the rules. I understand why they're changing the rules, but as an investor getting caught in that kind of thing, it's bizarre and it hurts. And then how do you prepare? So I also own a stock in China. Do I have to be aware that they could delist all the Chinese stocks? I've thought about it. I'm holding on to it. It's China Automotive Systems. I like the company. I think it has a lot of upside. But, the powers that be just say, no, new rules today. We're changing. And they explain why, and I get why. At the same time, I don't know if they always recognize the repercussions of what they're doing.
And the other thing is, too, I think maybe they have a long-term vision and they're okay with some short-term turmoil to figure these things out. But I think I always just kind of calm myself by looking at any previous drop in the market. And even if it takes a while, long-term, our economy is based on inflating these prices higher. And I don't think we can stop that train from moving right now. We can slow it down, we can hit the brakes, but that is the way the economy still runs globally for the most part. So
years ago, not so long ago, they were afraid of deflation. I think it's a red herring. If you have 1 or 2 or 3% deflation, I don't perceive that as a problem. Some countries went to negative interest rates, which I thought was asinine. So I think deflation, like inflation, if it's 1 or 2 or 3%, it's not a problem. But if deflation is like it was in the Depression, double digits for a few years, that's a problem. So I think there was a wariness, and governments were doing certain things to avoid that. I actually said at the time, I don't think deflation is going to happen anyhow. And I happen to be right. I'm not always right, but in that case I was. So it's very interesting watching the powers that be, and often how a lot of countries went to negative interest rates, which I had never seen before. They were talking about doing it over here, and I just thought, don't be stupid. It doesn't make sense. It certainly doesn't make sense now. Somebody comes up with this new way of doing things, and other people, the group think that I had mentioned before, may glob on to doing that.
It's funny, negative interest rates and all of the different things we've been seeing lately. There's some things I'm seeing that just don't, even debt to GDP ratio. I remember years ago, Canada was at 165% debt to GDP ratio, and people were calling that nuts. Now it's way higher. And we kind of just threw some of that stuff out the window temporarily, it seems. I mean, I don't know how else to describe some of these things, right? So
some of it's thrown out the window for convenience, like how the government could run these huge debt loads and just justify it, and you're continuing to do it. And again, in this country, it's federally, it's provincially, and it's like, it doesn't matter. You're going to be okay. But at some point, you have to deal with it. And right now, it's like they're putting their heads in the sand, as I said before. So, and who's going to pay? The future generations are going to have to pay if they can, and it may be very, very difficult for them to do.
Well, one of my friends, who's not a huge fan of Justin Trudeau, he always reminds me that the budget will just balance itself, apparently. So we'll see. We'll see how that works out. But a lot of people are worried that the people in charge are just spending with no real plan to kind of fix that right now. So it's going to be interesting.
And part of that is, as I said before, they want to stay in power.
Yeah.
So it's a lot easier. I remember when Paul Martin actually, he started dealing with the debt and the deficit. And I always respected him for it. But to do that, there's some heat that often happens. And Justin Trudeau might just not want to deal with that because he doesn't want to deal with that heat. Plain and simple. And he's got a good excuse with the pandemic. But we've seen the savings rates here are super high in Canada relative to historical levels. At the same time, this is kind of bizarre, debt levels are huge. So I don't know. But yeah, a lot of the rules and beliefs were thrown out the window for a while, and then all of a sudden they have to pay. And how are they going to do it?
Yeah. I mean, I think for anyone that thinks we're going to go to like 10 or 18% interest, I don't think that's happening. The world would collapse here, I think, if that happened. They're probably raising rates going into a recession, so they have ammunition later, is more what I think, and they can kind of deal with what's coming without being at these low rates anymore, right? So we'll have to see what happens, right? We'll have to see what happens and how it shakes out.
Well, rates, I think, could go quite a bit higher. 10% interest rates wouldn't necessarily surprise me. I'm not predicting that.
Wow.
But we also have to remember, I said I'm not predicting that.
Yeah.
We also have to remember now that, rates have gone from 1.5% to 2%, go to 3% for. Historically, they've been more at 6-7%.
Right.
And, given that they're still so very, very low, and a lot of people don't realize that the norm is, say, good double of where we are now. And as I said, a lot of people, because they're young, they haven't seen it. A lot of people are dealing with this kind of thing for the first time. I'm not. That's for sure.
Well, you know what the thing is too. Like, I think we can go like 5-6%, whatever it is. I just don't think that people are going to like that. Like I said, the type of mortgages and borrowing that people have, that's going to put a strain on a lot of people. But we'll see what the world provides us, I guess, right?
Well, it would put a strain on a lot of people. It's already happening. You'll see a lot more bankruptcies.
Yeah.
You'll see a lot more houses go on the market for sale because people can't pay the nuts, so to speak.
Yeah.
There's going to be a lot of that. So, major way to prepare is have that debt low. Yeah. But a lot of people are going to start to say, well, I can't deal with this. And how are they going to do it? They're going to have to sell off some assets. And I think bankruptcies will almost surely go up.
Yeah, and that's why I think the discussion has been, I don't know what's going to happen in the next 12 to 24 months. I told you, we're in this question mark period where we don't control it. We're spectators to this right now. Mm-hmm. And we're going to watch what happens and what the government does. But it could go towards 5-10% interest. It could be 12 or 24 months or more of choppy action. So I think right now people need to be careful what they invest in. But you can't always be afraid either and not invest at all, right? So it's a balancing act.
Well, I agree with you as a general rule, but if people are focusing on paying down their debts like I suggest they do, they may not have the money to invest.
For sure.
Plain and simple. And again, that sounds kind of boring, but I think as a general rule, it moves a lot of people to freedom. One of the problems can be your neighbors then, they've invested in this and that, and they made a fortune on their marijuana stocks, on their Bitcoins, on this and that. Maybe not now. And therefore, they're making all this money. They have that beautiful new car in the driveway, and you're paying off the old beater so that at some point you can buy a new one. And, my car's over 10 years old. And we generally drive older cars. And to me, that works.
Yeah.
Because a house is a major investment for people, and a car is a major investment for people. So, if you're really keen on having super cars, you can throw your money in it all the time. Also, it's friendlier for the environment. If you're not trading your car every 2 or 3 years like a lot of people do, that means they'll end up manufacturing less cars. Now, perhaps the pollution can be slightly higher, but overall, it's going to help the environment. So, keep your car. There you go.
There you go. Keep your debt low and keep your car for a while. Good advice.
There you go. That'll help. They're intertwined.
That's good. Well, listen, that's a great discussion. I'll let you go. I'm sure you got other things to do. I appreciate your time again and coming to us at a good time where people can get some good insights at a completely different time when the market's different. And let's see what the next little while brings us here, and we'll keep tabs on it. Any other last words or final pieces of advice there, Benj?
I think try and stay disciplined. Try not to blow with the winds. You can only do so much try and take control of your own financial situation. By doing that, hopefully you'll end up doing all right. But it's certainly, there's no perfection here. You can only do the best that you can and accept that we're all humans, and none of us, as far as I know, are perfect.
For sure. And I mean, stay humble basically is, the root of that. So very important. Listen, anyone who's watching or listening here, check out Benj, his website, Contra the Herd. He's got the Uncommon Investor 3, Contrarian Investors 13 are two of his books. Check them out. And Benj, again, thank you for taking the time, and we'll catch up with you next time, okay?
That's great. And if anybody has any questions, by all means, email me. It's a pleasure, Mike, every time. I look forward to the next one.
Perfect. Okay. Thank you. Take care.
You too.